FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 6/4/19. Well, May has gone away. May is behind us. Now we're into June, getting into the second half of the year where interesting things are bound to happen. As always, we love it when you're part of the show. Simply email us, kl@kerrylutz.com. We answer everything, slowly sometimes, but we do answer everything. So where is the market heading now? Have we peaked? What about oil prices, which have crashed, and precious metals, the dollar, interest rates? Well, with us now is our good friend from InsideTrack.com. That's INSIIDE track.com. I'm talking about Eric Hadik. Eric, welcome back. And so markets have kind of pulled back a little bit in the past couple of sessions, starting last week.
Yeah. Well, thanks for having me back, Kerry. And certainly the stock market has had a nice sell-off in May. I think we were even talking about it back in a previous interview or two. Mm-hmm. Just some of the convergence of cycles that my work had coming into play in late April, early May. And it was actually directly linked to the peaks back in September of last year and in January prior to that. And this about 7.5 month cycle that has spanned these significant highs and significant sell-offs. And it actually goes back a couple years before that, and an overarching about a 15.5 month cycle. And they were all showing that the market should rally from the end of last year into late April, early May, and then enter what I think is ultimately going to be about a 3-month correction. The initial phase I expected to drop into at least May 31st. There's certain indicators that needed to confirm, and they finally did. And when that happens, usually you see a little carryover, spike low, and then some consolidation, getting ready for a second shoe to drop a few weeks down the road. So I think that we're probably getting ready to enter that phase. And just saw the NASDAQ and Tech Stocks really had a blow off to the downside yesterday and hit some critical support, even as the Dow and S&P kind of held up. So it's kind of factoring into that idea that we're getting this spike low and probably going to see some recovery in the short term.
Mm-hmm. Little short-term bounce, dead cat bounce, perhaps.
Yeah, but I think that it won't immediately lead to another sell-off, but more likely that we'd see a couple weeks of whipsawing within a new trading range before certain indicators need to kind of roll over and start to drop and catch up with this decline, and then you get the makings for a second drop after that occurs.
Second drop, and is it going to get below the December lows of last year?
That actually is going to depend a lot on a couple of key factors that need to unfold over the next couple of weeks, and it will also be somewhat influenced by how much of a rebound we see here. I think ultimately we're heading back to those lows, but not necessarily in this May through August time frame that I'm looking at as far as this particular correction.
So really, we're just going to be looking at some added volatility here to the downside, and then we're going to reach a point after December. It's either going to recover or go down from there.
I think that we're going to see a sell-off into August or September,
Right.
and really at that point, the market should start to reveal some more specifics about what to expect going forward from then. But as far as 3 to 6 month turning points and cycles, my work was focused on that late April, early May for a peak, and August, September for a low. I do expect that to get more fine-tuned and more specific as daily and weekly indicators start to come more into focus and more into play. But it will depend at that point on what the market has done to start molding expectations beyond that.
Okay. So what about precious metals, gold, silver? What are we seeing there?
Gold in particular has just continued to adhere to the outlook I had for this year. That was an initial surge into late February, early March, and then about a 2-month pullback. It needed to get down to 1270 in order to trigger a new buy signal in my work, which it was able to do in late April, early May. And from a cyclic standpoint, all along that was telling me to look for a second rally that would last into July of this year. I think we're probably going to see the peak in precious metals in July, maybe stretching into August in things like the gold stock index, gold silver index. But that time frame is when I'm expecting the high for this year.
Really?
And some of the price targets are starting to come into focus, but I need to see some corroboration this week before I'll have a higher confidence level in where I think that gold can get to on the upside before that peak is seen.
So any idea though where you think it's heading? The peak for the year?
Right now, it definitely needs to retest the late February, early March highs. And all along, my 1 to 2 year target, dating back to August of last year, when a low was triggered, the 1 to 2 year upside target was 1410 to 1445. But there again, that doesn't necessarily mean it's going to be hit during this particular cycle high. There will be subsequent cycle highs when the market would be expected to progress to higher levels. So that time and price coming together has to be honed by the action in the next few weeks.
Okay.
But at the very least, a retest of the late February, early March peak up around 1345, 1350.
And we got to see it hit past 1363, 1380. Really, that's been the resistance point for years now, right?
Yeah. Since the third quarter 2016, it has bumped up against 1370, 1375, 1377 in the futures market. So right in that, just below 1380 has been a pivotal level for almost 3 years now.
Yeah, really has. And it's every time it gets close to it, it pulls back. So we'll have to see. And silver pretty much going to follow gold. I mean, silver really has been declining, hasn't been doing much here.
Yeah, silver continues to be far weaker in a different structure. When we hit the late February, early March peak, the first thing that my analysis was showing in silver was that it needed to drop back to its November lows and it continues to lag well behind gold. I think there will come a time when you've got a little more of an inflationary environment and silver starts to catch up and overtake the gains in gold. But until then, you've got gold having some safe haven status, even as the market was selling off here, particularly at the end of May and starting to accelerate. All of a sudden, gold comes back to life, and you see that frequently. But silver, because it's, as much industrial as it is precious metal in how it's perceived, you'll sometimes see something like that having a almost a 180-degree opposing effect that gold will surge on that safe haven status. Meanwhile, the sell-off in the market has a little bit of a deflationary feel to it, and so silver struggles to do anything along with gold and gets more burdened by the deflationary aspect of it. So,
right.
And that's normal. I mean, I think that sometimes traders get a little naive when they think that gold and silver have to move in tandem because they have different factors influencing them. And you need to be aware of what the prevailing mindset is in the market, what focus there is, what's really kind of standing out in traders' mind and in their focus.
Right. Okay. So what about the dollar? It stayed up. It's been pretty strong. It's not going any higher, but it's not going much lower either.
No, and the dollar just keeps bouncing up on the dollar index. Its resistance right around 98. And it first attacked that level in November and December of last year, and it has attacked it numerous times since then. It'll spike above it for a day or two, but often not even close above it. And I do think I have been expecting to see a more significant sell-off and a subsequent low in the third quarter of this year. It's just that sell-off has been very slow to materialize. Does kind of tell me that when it does happen, it's probably going to be all at once, and either you've recognized it quickly or you're on the outside looking in. But I do think that the dollar's ultimately could pull back to about 93.5 on the dollar index, and that's where it has some really decisive support. And that might be the thing that really kind of coincides with what I was discussing in gold, that if we get the dollar selling off into July or August, gold rallying to new highs, and then those trends kind of reach their culmination, that would probably be when the dollar is in a position to head back to that 98 level and potentially spike above it.
Mm-hmm. Interesting. So interest rates, what are we looking at here?
They are probably coming into the most significant turning point of any of these markets. Bonds and notes back in early March triggered some additional 2 to 3 month buy signals. And this whole combination of weekly and monthly cycles that I've described kept projecting an overall rally into this week, the first week of June. And then even some daily indicators and cycles in May were corroborating that and telling me to look for a surge at the end of the month, at the end of May. And we just got that and got bonds and notes spiking up to some extreme levels on the upside. So I am starting to look for a top to take hold here, and I think it's a top that could hold for quite a while.
Okay, and oil. You made some comments about oil. They seem to have fallen exactly into the pattern you were predicting here.
Yeah, and it's that same energy equity connection that I've talked about the last year or so. That those two markets, crude and the equity market, stock indexes, have moved in pretty close lockstep with each other. There's often a lead or a lag of a week or two, but even back in September, October of last year, when both crude and then stock markets triggered 2 to 3 month sell signals, then all of a sudden they're plunging together by the time you got midway through October. And similar thing in late April, early May of this year. What I really liked from a technical standpoint and a confirming signal was in mid-May. We had some weekly cycles in a lot of the energy markets that said we should turn particularly negative after that. And you got this divergent peak where heating oil was able to spike to a new high, unleaded gas went right back to its high, and crude rallied to a much lower high while maintaining some negative trend indicators that I use. And that's when I was warning my readers that we've now got this classic divergence where you usually see the sharper sell-off after that. And it was about a week later when all of a sudden the floor was yanked out from under crude. And similar to stock markets, I think that we're into a period in late May, early June where we could find a bit of a new floor under the oil markets, but that floor would be something that leads to some volatile consolidation for at least 2 to 3 months, not a real pronounced uptrend from there.
So overall, when we're looking at a fairly quiet, subdued summer or a lot of volatility?
I can't even really tell you there. I think that with some of these cycles and some of the wave structure of some of these markets, I think there's going to be a couple of big sharp moves. But, looking at recent history, those moves could unfold over a 1 to 2 week period, and then the rest of the time in between, before and after, is just kind of dead. So that type of trading would not surprise me at all, but I don't have any specific indicators telling me to either look for 3 months of wild swings back and forth or 3 months of dead action with periodic spikes here and there. So really don't have a strong conviction either way on that.
All right. Hey, and finally, Bitcoin. So it's come back up. It's at 7,900 right now. It kind of hit the peak. Where are we heading there?
I had 2 upside targets from when it bottomed in mid-December and then triggered buy signals in early February and then again in mid-March. And each time they were those signals and the way the market was structured had me focused on 2 levels. One was 8,400 and ultimately 11,000 to 11,500. Right now we've hit and spiked above that 8,400. We're playing back and forth around it. And with a market like Bitcoin, you need to give it a little more latitude where those levels are concerned. But I do think ultimately it could make it back up to that 11,000, 11,500, but it could take a little while longer to get there.
All right. Interesting. Well, we'll see what happens there. Been a volatile market, to say the least, and I've been bearish on it for quite a while. I don't know if it's a dead cat bounce. I hesitate to think that it could possibly go back up to 19,000. Plus, in light of everything else, it's got some major security weaknesses that will allow players, should it be deemed to be a threat, to be neutralized overnight with extreme prejudice. And I've given some over the last, really since its peak, I've kind of drawn some parallels between not just Bitcoin, but the whole cryptocurrency arena. And what you saw with tech stocks or the .com stocks in the early 2000s,
And you had this parabolic move in the late 90s, just like you did in Bitcoin in 2016, 2017. And then you have this complete collapse of that bubble. And in both cases, the NASDAQ 100 back in 2002 and Bitcoin in the end of last year, they dropped back to what I called the equilibrium point, which is really where those parabolic moves started. And in Bitcoin, that level was 3,200. That was the downside target for me throughout 2017. And my point is that those, in each case, the tech stocks and now cryptocurrency, it's an arena that's not going anywhere. But it's one that got so far ahead of itself that, there's years of wound licking to occur before it can really mount a sustained advance again. And you look at how long it took for tech stocks to really come back into favor. And, now, of course, they're just the do-all and end-all again until recent days. But, I think that same thing with cryptocurrency, that it certainly is the wave of the future, but there's some struggles to go through first.
Yeah, I couldn't agree with you more. And it might not be Bitcoin that is the leading cryptocurrency come the future. In fact, my prediction is it won't be, because of the limitations, both technological and security, that are kind of built into Bitcoin. And Bitcoin can be blocked. Every node in the world, there's only 7,000 of them, can be blocked either physically or technologically.
Yeah, I agree with you that it's unlikely. Usually those leaders and pioneers are not the ones that are still around when the true heyday of a market occurs. And so just from that analog type of standpoint, I would agree that it's probably not going to be Bitcoin, but when that transition occurs remains to be seen.
Yeah, and how it occurs. I just remember AOL during the dot-com boom, and every day that stock would go up $100 like it was nothing, And now what's an AOL? Most of these millennials don't even remember it, and it could well happen here. Anyways, so just tell us, Eric, best places to find you these days.
Our primary website, InsideTrackTrading.com, and we've really kind of made the shift from InsideTrack.com to InsideTrackTrading.com. And so that's the best place, and that is with the extra I in the middle there, INSIIDE, TrackTrading.com. And also continue to have dozens, actually probably hundreds of archived posts and articles on 40yearcycle.com that also apply to this discussion of a 40-year cycle that I'm often referring to. So they're the two best places.
Excellent. And there's a link to those sites in the show notes to this interview. As always, email us kl@kerrylutz.com. Twitter handle is @KerryLutz. Facebook page, Financial Survival Network. Eric, thanks so much for coming on. We'll talk to you again real soon.
Thanks for having me, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.